frame, this is where we are going to look for our entry. We should be looking for sell continuation since the trend of the 15 minutes is bearish as well. So 1 hour is bearish, 4 hour is kind of consolidating, 15 minutes too is bearish. Now this is the bearish market. We have this higher high, higher low, the higher high, then price start ranging here like this. Then it break through this last low, giving you a change of character. So price has broken through this last low. You are having a change of character now in the market. That means price action has changed character from that bullish time, from that bullish market structure. I mean, yeah, from the bullish market structure to a bearish market structure. Should be chalk. So now, how will we know where we are going to sell from? Where our sell continuation is going to be at? That's where we use our Fibonacci retracement. Fibonacci retracement is a tool. Price. Please mute your mic. Fibonacci retracement is a tool to check when a retracement will be over. Now, in a downtrend like this, you have this impulsive move, you have this retracement to your fair value gap or supply level, then you have another impulsive move, you have this retracement again to your fair value gap or supply level, and you have this impulsive move again. So, is this retracement, this buying that has happened, that wants to know where it's going to be over? That's when your Fibonacci come into place. Now, your Fibonacci, for those that are new, I'll send the settings of your Fibonacci on the settings you are going to use to make it just like mine like this, because it's under settings you are going to be having. So your Fibonacci retracement price respects, out of 10 times, price respects this 0.5 to 0.6 level at least 8 times out of 10. So when you have your other block here or you have a fair value gap, there's a high chance price action is going to come into that level and sell from there or buy from there. This 0.5 to 0.6 level. So how we use your Fibonacci in a downtrend? Use it from your swing low, your swing high to your swing low. That's your lower high. Your lower high to your lower low, because we want to know when this retracement is going to be done in the market. So, like I said, you put your swing high, your one will be here, and your zero will be here. You mark it out and you draw it out like this. So, like I said, it often respects this golden level in Fibonacci. So let's say you have a fair value gap here now, and price action is, you have, that's one confluence. Price is on your fair value gap. The second one is price is on the golden level, this 0.5 to 0.6 level. That's your second confluence. And your third confluence is probably price has now given you that evening star. There's a good chance price action will sell from there. So that's when you enter your sell, and your SL will be above this 0.6 level like this. Then, like I said, you target a 1:2 or 1:3. But in most cases, I target a 1:3. So as soon as price has gotten that level, that is where it will sell from. And don't forget, like I said, in a downtrend, use it from your swing high to your swing low. The retracement, when the retracement is done, the golden level, the uptrend is from your swing low to your swing high. You have structure, then from your swing low to your swing high, then you mark to your golden level as well. Let's say you have a fair value gap there. The first confirmation you have, I mean, your price is currently on the golden level in Fibonacci, your 0.5 to 0.6 level. Now, the third confluence is where your morning star will now come into place. Don't forget, your morning star is the confirmation you use. As soon as it has complete, once you see your confirmation on the 15 minutes or 5 minutes, that is where you will buy from, and your stop loss will be below the zero point 0.6 level, middle like this. Then you target a 1:2 or 1:3. Do you guys understand that I just use my Fibonacci now?
Please, I have a question.
Yeah, what's your question?
It's concerning calculating stop loss in trading view for gold and other pairs.
Okay, let me You know what? Ask me when I'm done with the class, so I'll just quickly show you how we're going to do it. When I'm just done with the analysis,
Okay.
you just show me how to do them. So now, once we see that price has broken this structure, we need to know when this swing, this is the swing high and swing low. When a downtrend, we need to know when it's going to go over. So we're using it from this swing high to this swing low. So in most cases, price action will come into this level to sell from. So let's go to the 5 minutes to see if there's a fair value gap there or something. Okay, we have this other block. You can see this other block here. Let me take this down. So you can see you have this fair value gap here that price action has tapped into like this. Has tapped into it, and like I said, the candlestick before your fair value gap is your order block. So this, please mute your mic, bro. So this black candle is your order block. So as you can see, it corresponds with the golden level in Fibonacci. So what we should be doing, what we should be expecting in the market for price action to come into this level, then we would buy from here. So we're going to put our entry here at this top of this 0.5 level like this. You put it here like this, then your stop loss should be above this area. The stop loss should be above this area like this, and you target a 1:2 or 1:3. That's just how to do a top-down analysis. It's just that simple from the 1 hour to the 15 minutes and the 5 minutes. So to me, once price gets to this level, I'll be entering here immediately. As soon as price gets to this 0.6 level, I'll be entering here immediately. Because in most cases I use entry, and in most cases I don't use entry. Depends. So that's it for gold. We'll be expecting gold to sell from here. So you guys should just go and set your alarm around this level. Once price action has gotten that level, we'll see how it plays out. So this is the gold signal for this week, for tomorrow. So GPUSD, what's GPUSD saying on the 1 hour time frame? The 4 hour time frame, GPUSD is bearish. It has been selling. You can see this low, lower high, and lower low. It has been selling on the 4 hour time frame. So on the 1 hour time frame, we'll mark out our analysis. Where is your recent break of structure? You understand price action is bearish. So where's your recent break of structure? This is your lower low, lower high, and you have this break of structure here on the 1 hour time frame. So using your Fibonacci, you see where price action come and tap into. You can see it respected this 0.5 to 0.6 level. See how I see it? In most cases, it respects this 0.5 to 0.6 level. So you see, once it has gotten to that 0.5 to 0.6 level, that is where you enter the trade. But now we are consolidating on this level from this swing high to this swing low. GBUSD is still bearish. There's a fair value gap here, price action has not been tapped into, and there's a supply level here. So what might just happen in this market is we either wait for price action to come and tap into the fair value gap like this, then wait for confirmation to sell, or we see a new break of structure. This swing low in the market, we see price action take it out, then to give us a new break of structure, then a retest is where we will buy from. Do you guys understand the GP analysis? Are you guys there?
Yes,
Yeah.
so yes.
All right, so let me take this
Yeah,
down.
yeah, yeah, yeah.
So now that's for GPUSD. For JPJPY, don't forget I said there's news tomorrow for JPJPY. So you need to be very, very careful when you are trading JPJPY. The volatility is going to be very, very slow. GPJPY, we are still bullish. There's a higher high, higher low, and a higher high. So it's ranging from this low to this high. Either it gives us a break of structure, a new break of structure for buy continuation, it breaks the structure, then it come back to retest the fair value gap or demand zone, then went up for a buy. Or it takes out this low right here for a change of character. It comes down and takes out this low for a change of character, then it retests for sell continuation on JPJPY. So going on to the 15-minute time frame, let's see if we can see a quick scalp. For a medium probability trade on GPJPY, you see price action take out this low. This is an internal structure. So you have this higher high, higher low. You because it's a internal structure. That's why it's a medium probability trade. Whenever you are trading internal structure, it's always internal structure or all trend does not align. You are basically trading a medium probability setup. If you are counter trading and just one just one time frame is either bullish or bearish, is a low probability setup. Advice you to take it. So with that see price action, take out this low for a quick sell on JPJPY. Take out the low. Once it takes out this low, you wait for a retest to the fair value gap, then you can sell on the 15 minute of JPJPY. For BTC, BTC has consolidating as well. Please mute your mic. Oh. You guys should mute your mic. So for BTC, on the 4 hour BTC, we are still very much bullish, but it is consolidating currently. You can see it has been buying, but right now we've been on this consolidation trend. So there's this week on the 1 hour time frame, price action has net tap into. Okay, it has given us a break of structure here. This downtrend, you can see it has given us a break of structure. There's this week here, price action has net tap into that it might still eventually want to tap into before it starts selling again. Before it starts continue its selling continuation. We have a new break of structure. This break of structure, all these break of structure are all internal break of structure. This is a new break of structure here in the market. So you have that break of structure. So either you wait for price action to come into this supply level, and we also have this fair value gap price action we might want to use. So we need to watch out for this fair value gap as well. So it might tap on this demand zone, come into this fair value gap and keep selling, or take out this high and start with its bullish continuation. So I guess that's the pair I see a lot of us trading. Is there any other pair you guys used to trade, or do we have any question for today? Because that's all for the analysis. Please, I cannot keep checking the message. Try to unmute your mic. I cannot keep checking all the messages. Unmute your mic if you have any questions for me to answer them. Do you have any question from anyone?
My boss,
Yeah,
good evening. So,
yeah.
I, yeah, I wanted to say that you didn't talk about, like, is it only for gold you will do analysis from only 1 hour to 15 minutes or
This is the
five
1 hour.
minutes?
It's all time frame, all analysis, all peer you use 1 hour. All analysis is 1 hour I've been using. This is the 1 hour time frame now. JPJPY, this is the 1 hour time frame too. This is the 1 hour time frame, and GP, this is the 1 hour time frame. It's 1 hour you analyze the markets. 15 minutes and 5 minutes is where you look for scalping. If you want to scalp, or you want to enter, or you want to take a hold on, I'm coming. So 15 minutes or 5 minutes is where you want to take your entry, or you want to scalp. That's what 15 minutes and 5 minutes is used for. So it's 1 hour I use for my analysis.
What of the
You
5 minute
understand?
change of character?
5 minute change of character is also a confirmation you can use. So now let's say price action on this 1 hour time frame, you're in the 1 hour, has gotten to your fair value gap. Has gotten to your fair value gap like this. You then go to your please mute your micro. You then go to your 15 minutes or 5 minutes to look for a change of character, like the one I did on gold. Like this was I did on gold. So please mute your micro. So I was saying this is the 15 minutes or 5 minutes. Soon as it has come into your demand zone, this is your 15. Please mute your mic. Who is this now? Soon as it has gotten to your fair value gap, that's still why we are on this 15 minutes and 5 minutes for sell continuation. As you can see, it has given us this change of character, come back, then retest to the demand zone, to this other block for a sell continuation. Do you understand? The person that asked the question, do you understand what I just explained?
Yes,
Boss,
boss.
can you do like
But
little
what
recap
if
on
the
that top-down analysis of the gold after identifying the trend and looking seeing the break of structure? Network took me out. I didn't grab what you said and about
Wait,
the Fibonacci
what do you say?
confluence.
What do you
I
say?
mean, like, can you a little recap on the top-down analysis for that
Ah,
good,
ah,
the first
ah, ah.
analysis we did.
I don't even need shoes, eh? I don't even need shoes, eh? Oh, man.
Okay, for the top down analysis, you go down to your 4 hour time frame or daily time frame. This is your daily time frame. You check who is unmuting his mic. On the daily time frame, you used to check the direction of the market, who have been in control of the market in like weeks or months. So on the daily time frame, you can see it has been consolidating. The 4 hour time frame as well, it has been consolidating. You can see it is not breaking past this high, it is not breaking past this low. It has been consolidating. That's what the daily and 4 hour is used for. To check who have been in the market, what's the directional bias of the market, what's the other flow. On the 1 hour is now where you start analyzing the market. The 1 hour you look for either you're in a downtrend or uptrend. So in this scenario, you are in a downtrend. That's where you now look for your supply zone. A downtrend, look for supply zone. A uptrend, look for demand zone. So now you're in a downtrend. The first thing you look for, like I said, to find your supply level, or let's just call it order block in this scenario. You first look for your first key point, which is your break of structure. So as you can see, you have a break of structure here in the market. The second key point is your fair value gap. This is your fair value gap. You have the fair value gap here. And I said the candlestick before your fair value gap is your order block. So it is this blue candlestick above here that is your order block. So now that you've gotten your order block on the 15 minute on the 1 hour, you will then go to the and like I said earlier, there are some cases price action will use the fair value gap. Like what happened here. Soon as it has come into your fair value gap on the 1 hour, you go to the 15 minutes to look for 15 minutes or 5 minutes to look for entry. In this scenario, we are not seeing a evening star. A evening star is the confirmation we wait for. So we're not seeing an evening star on the fair value gap. You then go to the 5 minutes, you say evening star, that is where you enter the trade. So you can see right here inside your fair value gap, you have this evening star. So as soon as it closes with your evening star, that is when you enter a short position. That means you are selling. So that's when you will go short. Then you put a few pips above. Then you target a 1:2 or a 1:3. Do you understand now? That's just how you move your top down analysis from the daily time frame to your 15 minutes and 5 minutes for entries. Do you understand? The person
But
that is asking.
Yes.
if the higher time frame, which is the daily and 4 hours, is a bullish is bullish, while and the lower time frame is bearish, we'll be looking for sell or buy.
Yeah, very good. So if your daily time frame is bearish, your 4 hour is bearish, and your 1 hour is bullish, don't forget, it's your 1 hour I say you use to mark out your analysis, because it is that 1 hour which is a daily. It's that day you want to look for analysis. It's that day you want to look for entry. So your 1 hour, you will look for your entry and your analysis. Your analysis rather. The 4 hour daily is bullish and 1 hour is bearish. Is that bearish you should watch out for, because is that bearish you're going to mark out your break of structure and fair value gap to look for sell until it has changed character on the 1 hour to then bullish. Then you can continue bullish by continuation. Do you understand? But it is the 1 hour you should always follow. Do you understand?
Do you understand what I'm saying?
Do you understand?
Fibonacci as
Yes, I
confluence.
understand. Yes, I understand.
All right, all right. So, do anyone else have any other question? Are we done for today?
What about using the Fibonacci as confluence?
I already mentioned it
Yeah, I
now.
think this is like a question.
How to get your Fibonacci. Price often respects the zero point 0.5 to zero point 0.6 level. It's called the golden level in Fibonacci. That's where price action often respects the golden level. So now, once let's say you are buying in an uptrend, your Fibonacci will be from your swing low to your swing high. So now, let's say price action has retest into your fair value gap like this. I turn to your fair value gap. Let's say you have this fair value gap here. You can see it is currently respecting this zero point 0.5 to zero point 0.6 level. So that's the second confluence. The first one is fair value gap, second one is Fibonacci. So once it has gotten to that level on the 1 hour, that is when you go down to the 15 minutes or 5 minutes to look for your morning star in a buy trend. Do you understand? That's for the uptrend. For the downtrend, use it from your swing high to your swing low. So you put it from your swing high like this to your swing low. So you're waiting for price action to come into this golden level where your fair value gap is also located. Then you go down to the 15 minutes or 5 minutes and look for your evening star. That's the three confluence you are going to use. Do you understand? The person that just asked about Fibonacci. So is there any other question or we done for the day? So tomorrow, please guys, tomorrow is Monday. Don't be in a hurry to enter the market because tomorrow, trust me, you are going to see a lot of people in the group start sending a lot of analysis, this, that. And I want you guys to understand something. When somebody is analyzing the market, when someone analyzes the market, it does not mean the person is 100% that okay, that's what is going to happen. In the, in the market, it is easy. It is very, very easy. Anybody that okay that has the ability to analyze the market can just analyze like 10 different pairs, can just keep analyzing the market. But for you to actually, is someone saying something? But for you to actually use your real money to trade is what actually makes you a trader. So what am I saying in essence? If you see someone drop your analysis, don't just jump into the person analysis. You can't grow like that. You can't. It's impossible to grow like that. So what you should do is if you've analyzed them, it's not every day you have to trade. Once you've analyzed the market and you see your confidence that yes, I'm 100% that this trade will go well, you now see someone else analysis that is also the same thing. That is when you cannot say yes, you're more confident to enter the trade. But when you don't see, when you not analyze the market, you just see someone drop buy or sell, you enter it, you enter stop loss. But along
Aí,
the
meu
as,
cabelo.
please mute your mic. Oh.
É, eu acho.
The thing is, you guys need to think about the future. You need to understand your growth. Are you growing in the market or you are just being stagnant? And also, I don't know I don't think the newbies have gotten the template of the journal. You need to journal how you are growing in trading. You cannot just keep taking okay, I want to this person signal. You will not grow. That's 2, 3 years, 4 years. You're just going to still be in where you're. But when you are actually doing this thing yourself, you're actually analyzing the market, you're waiting patiently for price to come into your zone for you to buy or sell, you see progress. So please guys, tomorrow is Monday. Do not rush the market. When there's a sort up, you follow it. If you are not sure, or let's say you have been in a losing streak consecutively for a long period of time, let's say a week losing streak or days week, do not use your real money again. This is the time for you to go back and reflect back to the videos and teachings and everything you need to work on. It's not the time you need to still keep putting money and keep blowing money that okay, yes, I'll still make it. No, it does not work that way. You need to go back and reflect back in what you are doing. That is where your journaling come into place. Each day at night, once you've entered a trade, at night you go after this class. I'll send the journal templates to you guys on the signal group so you guys can just make use of it. So I guess that will be all for today class. Good night everyone.
All right, good night, sir.
Good night, boss.
Yeah.